So you trade the Judas swing, and I know exactly what your problem is. Your problem is if you were to go and target Asia high for a simple 1-to-2 risk reward ratio, what would happen to you? You get taken out. Yes, my people, welcome back to the channel. Hope you guys are all doing well. Now, in today's episode, I posted on my Instagram story and in my free Discord server that I was doing free mentoring. This was literally a free one-to-one session, and all you guys had to do was just swipe up to the message and give me a reason to why I should select you. And on the recording of the call, which I'm about to show you guys, I went over the most common problem that a lot of beginner traders have that are new into trading. Now, before we get into the video, I just want to let you guys know that if you have missed this call, it's not the end of the world. I'm running a free masterclass in my Discord server. All you guys have to do is go check out the link in the description and the free Discord server will be there. Press that link, join the server, and keep your notifications on for mentions only. We host plenty of giveaways on this server, and like I told you guys, it's going to be a free masterclass where I go over the 4 secrets that took me from being unprofitable to profitable. Trust me, you guys are not going to want to miss out on that masterclass, so I'm going to see you guys in there, inshallah. What's your name? How long have you been trading for? Introduce yourself to the people.
Yes, of course. So my name is Ronaldo. I am 24 years old. I come
MashaAllah.
from Albania. Maybe you know Albania, right?
Yeah, everyone knows Albania, man.
Yeah, I've been trading for about 4 years.
Mm.
The last 2 years, I think, I've been focused on ICT.
Have you gotten any payouts or funding?
Not yet, brother.
That's good. The fact that you've kept going up for 3 years, even after struggling to get any funding or any
Yeah.
payouts, that shows that you have a lot in you. If that makes sense. That's good. Allah barik, akhi, man.
At some points, I used to work also 2 jobs, so I have been on and off on Forex. I have not been 100% on it, but yeah, I have tried.
No, that's good. That's good. All right. What's your main problem in your trading? When you messaged me, you said to me that you trade like the Asia high-low sweep strategy or the New York to London swing, Judas swing, whatever you want to call it, and you keep getting stopped out recently.
Yes, exactly. So ICT has a strategy where he focuses on the Tokyo session lows and highs, and that's what I have been trying to do. And the issue, the problem with that is that it does not work always. So
you trade the Judas swing, and I know exactly what your problem is. Your problem is you're lacking higher time frame bias. Do you use higher time frame bias in your trading?
what I do is that I only watch the daily time frame. I see the last couple of candles. I see a bit of market structure in the near, but that's all.
Yeah, it makes sense. Overall, your higher time frame bias is probably your weakest point. I'm gonna go over this with you now. I'm gonna teach you higher time frame bias as best as I can. In order for, like, this key, if you implement higher time frame bias and what I'm about to teach you on this call, trust me, your whole trading will change. Because higher time frame bias is the most important part in your trading. If you can master the higher time frame, the lower time frame will follow through. I say this to my students all the time: make sure the higher time frame and the lower time frame are aligning. If the higher time frame is bullish, you wait for the lower time frame to be bullish. If the higher time frame is, however, bearish and the lower time frame is bullish, you don't trade, you wait. If the daily is bearish and the 1 minute is bullish, you wait. So what I'm going to teach you on how to figure out your daily bias is this. There's something called respect versus disrespect. Right now, let's just say over here, this blue box represents a daily fair value gap, whatever you want to call it, a higher time frame point of interest, a zone, whatever you want to call it. You want to see it. What does price do when it taps into this zone? For example, if this is a daily fair value gap, look at the daily time frame. You can see here the daily candle has tapped into this daily fair value gap, and if the body has failed to close outside of the box, then this means it is being respected. If price is respecting this daily fair value gap, you can expect a reaction away. You can expect for price to be bullish the next day, meaning in this case, your daily bias would be bullish because price has respected this daily fair value gap. Does that make sense? The body has completely closed outside of this daily fair value gap. This is now indicating to me that price has disrespected this daily fair value gap. If this happens, expect your daily bias to be bearish, meaning expect the market to continue going lower the next day.
I have a question regarding this.
Yeah.
Okay, let's suppose I am a day trader and I just open a trade within the day. Maybe on EURUSD it can be about 20-30 pips. Does it matter that much the high time frames?
Yeah, higher time frame matters than anything. Like me personally, brother, I don't trade the same strategy as you, but I'm assuming you're trading on the 1 minute time frame. You look at the 1 minute time frame, correct?
No, I usually watch at 15 minutes time
15 minutes. Okay, fair enough.
Yeah.
When you're looking for your entry, what do you take your entry off of? What time frame is that fair value gap that you're looking for?
Usually 15 minutes and sometimes 5 minutes.
Okay, makes sense.
I don't focus too much. I don't focus too much on 1 minute.
Makes sense. Brother, I trade on a lower time frame than you. I trade on the 1 minute time frame, right? And I still use higher time frame bias. I'm telling you now, no matter what time frame you're trading on, if you implement higher time frame bias into your trading, your risk reward ratio will improve. And that's why you said earlier, some of the trades, they go on to hitting a lot of take profits, right? And then the next day doesn't work. If you implement higher time frame bias, I promise you now, you'll avoid a lot of losses. Right, that's the main thing. If you can avoid losses, you're one step closer to being profitable. Another thing as well, your risk reward ratio will improve. So many positive things will come out of using high time frame bias. All it is you look at the high time frame, you figure out your daily bias, and you stick to that bias. If your daily bias is bullish, the next day all you're looking for is a buy. Simple. If it's bearish, all you're looking for is a sell. If this is a high time frame point of interest, as soon as the body closes outside of the box, then this now means this point of interest has been respected or disrespected. You tell me.
Disrespected, of course.
And in this case, what are you expecting price to do the next day? Go higher or lower? This is a bullish point of interest.
Price retraces a bit and then goes lower.
Amazing, right? Again, you see the wick of the candle. The wick can go throughout through the entire point of interest. I don't care what the wick does. As long as the body isn't closing outside the box, then that's okay. So I'm assuming your strategy looks something like this. You have the Asia low sweep.
Exactly.
You get a market short shift. You enter off of a fair value gap, whatever it may be, and you go and you hope for price to go in your direction. However, if the daily bias is bearish and price is drawing towards some liquidity which is at the lows and it's not looking to take out the highs, then bro, you will get taken out. Does that make sense? And that's why some days when your daily bias is correct, right, the market will actually go on to and hit your take profit. But if your daily bias is incorrect, then the market will not go up. If the market is bearish and it wants to go lower to take liquidity at the lows, it's not going to go take out the highs. It's going to go towards the lows first.
I have one more question. So when it comes to higher time frames, what do you specifically look there?
Yeah, so this what I'm going to do with you now. I'm going to go over a breakdown of a trade. Fair value gaps, they have to get mitigated, correct?
Yeah, of course, yeah.
Okay, this day over here, if you just go over to the higher time frame, we can see, first of all, this huge entire expansion over here has left a lot of fair value gaps, correct? You can see there's a fair value gap over here. There's a fair value gap down here. This entire range needs rebalancing, right? It needs a correction.
Okay, yeah.
Right? Now let's go back. You can agree that this is a 4-hour order block, correct?
Yes.
If I mark out the touch of this order block and go back to where price is, you can see when price tapped into this order block, has it respected it or disrespected it? Over here.
Respected, of course.
Amazing. Yeah. So what is it telling you that price is going to do?
It's going to start a down movement.
Amazing. It's going to start selling. And it makes sense. Why? Because we need to go lower. We have to go lower to go and mitigate these fair value gaps. Does that make sense?
Okay.
Right? Another thing as well, do you use the Fibonacci tool?
Not much, no.
Okay, fair enough. Well, I'm going to send you a video after this, and you guys watching the video, you guys will find the link somewhere on the screen. It will teach you how to use the Fibonacci tool. Now, I'm assuming you know that ranges have to get rebalanced, correct? Like, we have to go and rebalance with 0.5 of the range. I don't know if you know what that is. You can check out the video, which I'm going to send you after this call.
I use the Fibonacci tool in this sense.
Yeah, perfect then.
Yeah.
Right, so you can see we have a huge expansion leg over here. We have this low and we have this high. The market has to rebalance this range to the 0.5. And this makes sense. The market has been so bullish recently, and now we've tapped into a higher time frame bearish point of interest, aka that bearish order block. It makes sense for the market to sell and rebalance the range, mitigate these fair value gaps before it wants to continue going up. Does that make sense? It can go and do something like this.
Okay. Yes.
And just using common sense, right? No one wants to be buying all the way up here off of this fair value gap. Everyone wants to be buying in a discount. In some sense, you don't want to be buying so high. So if we go down to the lower time frame, this day, for example, over here, we can see what is the market doing. The market, first of all, it takes out the Asia low, the Tokyo low, whatever you want to call it. It takes out New York low as well. So it takes out time-based liquidity, whatever you want to call it. Now, what happens next? We get huge displacement, big fair value gaps being formed. Usually you would take an entry maybe off of this fair value gap or whatever you take your entry. The point I'm trying to get at, if you were to go and target Asia high for a simple 1-to-2 risk reward ratio, what would happen to you? You'd get taken out. Why? Because your daily bias should be bearish. Price is tapped into a higher time frame bearish point of interest. We need to go and mitigate all of these imbalances over here on the lower time frame. We need to rebalance the range. All of these things, right? The market doesn't have a reason to go up now. It wants to go down. Now, if you guys are struggling in your trading, you have no plan, no clear direction, you don't know what you're doing in these markets, you've been at it for so long and you just can't seem to crack the code. Whether it be that it's a psychological problem or that you lack with your strategy and your actual approach to these markets and you just can't read the charts, inside of Project 30, we dedicate multiple lessons towards these problems. Project 30 is a 30-day module where I teach you guys how to trade from the ground up. And me as a mentor, I host multiple weekly calls like this with all of my students together. We do trade breakdowns, we go over market outlooks, and we run a Q&A session at the end of every single one of these calls, so not a single question of yours would go unanswered. Make sure you check out the link in the description to join Project 30. With that being said, back to the video.
Yes, of course, yeah.
Right? So in this day over here, trying to trade the Judah swing or the time-based liquidity theory, whatever you want to call it, it wouldn't work because your higher time frame bias is wrong. And all you simply have to do for the higher time frame bias is go over to the higher time frame and let's go back to a random point in time. Practice understanding is price respecting or disrespecting points of interest. So we can go over here and you can see what is the market doing. The market is respecting this 4-hour bullish fair value gap, right? If we zoom out even more, we can see what has the market done. It's constantly taking liquidity at the lows, creating a market short shift or a breaker structure, whatever you want to call it, and it's going up higher. You can see here, we have a breaker structure towards the upside. We take all of this sort of liquidity over here, these equal lows, whatever you want to call it. There's so much liquidity that we take. We get a market short shift, we retrace, tap into the fair value gap. We respect this point of interest. We fail to close below it. We get another breaker structure. Again, tap into the fair value gap. Now, what can we see? We can see there are relatively equal highs above, right? You can see 1 high over here, 2 highs over here, 3 highs over here. This is a lot of liquidity, right? I say this to my students all the time. Never trade on equal highs. Don't try to be selling and have your stop loss on equal highs or equal lows. So in this case, it's most obvious that the market's going to go up. Your daily bias should be bullish. Why? Because it's equal highs above, price is respecting a lower time frame point of interest, right? And if we go down here, using your strategy, you can see the Asia low gets taken, right? Yes, it gets taken in the New York session, but it doesn't really matter. Price ends up tapping back into sort of this imbalance over here. You would have missed your entry if you tried taking an entry off here, but I don't trade in a 15-minute time frame, so I doubt I would have tried taking a buy up here. My strategy, I'd try catch it at the lowest point I can, right? But overall, you can see the market takes liquidity, gives a market upshift, taps back into a fair value gap, and then it goes away. It goes towards the equal highs. The key which I'm trying to get at, and the one thing I want you to take away from this, is understand higher time frame bias. Practice higher time frame bias. If you can master the higher time frame bias, right, you'll get really far in your trading. You avoid a lot of losses, a lot. When the market's bullish, you don't want to be selling. Don't try to sell the market.
Yeah, I have one more question. So as you can see here is the for our fair value gap. Price comes there, and let's say price did not take out the the Tokyo session low.
Yeah. Oh, okay. So I understand. Yeah. So, as in going into the London session, because it took out the Asia high, should you go and take a sell?
Yeah.
Absolutely not.
No, not a sell in this case. Should I take the buy?
Well, there's no buy. There's no buy for you because you're waiting for the Asia low to get taken out. Well, this is all depending on your strategy. My entry model, I can catch a reversal. So this would be a reversal, right? And I can catch a continuation. So if the market is continuing to go up, I can catch it. But that all depends on your strategy. In simple terms, in this case, if the Asia high gets taken, don't try sell, because you can see here, if we go down to the lower time frame, when the Asia high gets taken, what does the market like to do? It loves to give fake outs. You can see over here, it gives fake moves towards the downside. It invites in all of these sellers down here. They all get taken out because the higher time frame is bullish. Just because the market is going up and it's going away without you doesn't mean you have to enter the market. You simply have to wait and be patient. Cool. Any other questions, Akhi?
No, that's all. I think it was perfect. That's everything I needed to hear and to know.
Good, that's good to hear, man.
Thank you very much.
No worries, Akhi. Remember, just master higher time frame bias. I'm gonna send you a few videos you can watch on my page. And again, for you guys watching the video, you guys will find the link somewhere here. Nevertheless, Akhi, need anything, let me know.
Thank you very much, brother.